Welcome back to Lamb's Cryptoverse. Today I want to discuss all the strong economic data that we have. And I'm going to take out my list here, and you can see over the last month we've had a strong retail sales data, PPI data, that's inflation, CPI, that's another inflation data, and strong labor report, and there's another one coming out in a few days. And we had strong consumer spending, and there's an associated inflation report that comes with that the Fed likes to look at. That's the PCE report. That's a personal consumption expenditures, and they were up 6.8%. So that's basically the Fed's favorite inflation tool, as I said earlier. And we've had a strong ISM and ISM Services index, which you can see on the screen here. And we also had a strong durable goods order, including business investment that came out today. The only weak data we had is consumer confidence. Everything else is strong. And if you go, I'm just going to focus on this services PMI index. If you look at it, I've got my mouse on. We have 56.3. That's up from 55.3. So you're probably wondering, why am I saying we're going into a recession? And I think there's like a nearly 100% chance of recession when all the economic data is strong. And that's because we're at a limbo period now between lagged inflation and economic data and what's actually happening. And if you go on the street and you ask everyone, people are not seeing that. For example, there were double and triple orders of semiconductors, things like that, and you're not seeing that anymore. And that goes on and on. It's not just semiconductors. It's housing that's topping out. Everything's topping out, but you're not seeing that in the economic numbers yet. So as a result, because it looks like we're having a soft landing, right? It looks like a Goldilocks economy. Stocks are acting well. And remember, we had a setup in early to mid-June where everyone was negative, not just retail investors, but professional investors were negative in terms of sentiment, but not even just in terms of that. If you look at their positioning, they were very negative. They were shorting, for example, futures on the equity indices. And also in the spot market, they were very low in terms of cash allocation. They had lots of puts, and they had the lowest, I should say, equity allocation since the 2008-2009 financial crisis. So the setup was good for the strong stock market that we're seeing now. But here's the problem. I'm going to go to S&P right here. We're around 4150. And the problem is, let me just move this chart so you can see it. We're hitting resistance, and there's lots of ways of looking at resistance. You could just pick your technical analysis tool, whether it's point and figure, candles, candlesticks, DMARC indicators, Fibonacci. What I like to use is just to see where we had resistance. And if you see where my mouse is, we had resistance around 4100. And I think we could go higher because there's a lot of momentum, and we never had a big short covering rally. So if we could go higher, what I'm using is this line here. You see I drew a line from the top. And if we're using that line, it says we could go to maybe 4,200. So either way, no matter where you pick, I think we have a limited potential to go up further. Like the risk to return is not looking good. So I'd say stay invested, but sit by the exit seat because we're going to be going down hard soon. Because once that economic data comes out, that lagged economic data, investors won't be looking at inflation anymore. They're going to shift their focus from inflation to earnings estimates. And earnings estimates for the S&P have not come down much. So that's going to be the big kibosh on the market. It's really going to push down the market. I think we can go down more than twice as much as we've gone down. I think the S&P is down something like 15%, maybe 16% from the high. I think we can go down twice that, especially for the NASDAQ, especially those Cathie Wood stocks. Along with that is crypto. I think crypto can continue declining and hit new lows. Everyone now is saying that Bitcoin hit its low a few weeks ago when it was around the cost of production. There was an intraday low of around 17,500, And I don't think that's going to hold. So it bounced from 17,500 up to 23,000, maybe even high. It could even go higher. But I think stocks are going to be the strongest factor, and they're going to push down Bitcoin, which is going to push down all crypto prices. Because remember, Bitcoin is very correlated with the NASDAQ in the stock market. I think that Bitcoin has a beta of around 1.5 to 1.7 with the NASDAQ. So that's going to really, the NASDAQ declines another 20, 30%. That's really going to push down the price of crypto to new lows. So just be careful. And thanks for listening to Lamb's Cryptoverse. And don't forget to hit the subscribe and like buttons. Take care, guys. Bye-bye.